For the next video, we're moving on to Schedule I of the Form 5471. So Schedule I is Summary of Shareholders' Income from the Foreign Corporation. Okay, so now who needs to file this schedule? What additional worksheets do we need? We're going to get into all those details. So like the other schedules, if we look back at our required information table here, right? So this comes from the Form 5471 instructions. We can see here Schedule I, and the check boxes are for Category 4, 5A, or 5B filers, right? So if you are a U.S. person filing this return and you are one of those types of categories, then you need to include this Schedule I with your Form 5471, okay? So Schedule I, high level, what is this designed to do? When we have Subpart F income inclusions, we need to use Schedule I to show what portion is being allocated to the U.S. shareholder filing this form. Okay, that's really all we're doing here. So we have a Subpart F income inclusion. We have maybe a Subpart F limitation for EMP reasons. We'll look at that calculation later. And then we have to allocate the Subpart F income to the U.S. shareholder filing the return. Now notice at the top here it says if item H on page 1 is completed, you need to include a separate Schedule I for each Cat 4, 5A, or 5B filer for whom reporting is being completed. In this case, we're only filing one Schedule I, and that's for John, taxpayer, who's the U.S. person filing this return. But if we jump up to the page 1 here, I'll show you what they mean by that and why it would be relevant. So if John's filing this return, but he completes this section here, right? So section H, persons on whose behalf the information return is being filed, and he lists shareholder names, addresses, ID numbers, and checks off that they're shareholders. What he's doing here is he's filing this whole thing on behalf of the persons listed here, and that's fine. But the IRS needs to know how much Subpart F income is going to be allocated to these other shareholders down here, right? Because presumably if John's going to file this on behalf of them, they're not going to file these forms with their return, right? But they still need to know how much Subpart F income is allocated to them because they're still a U.S. shareholder. So that's why on the Schedule I here, we would have to include additional Schedule I's for each U.S. shareholder. But in our case here, we just have the one U.S. shareholder. We're not filing this on behalf of anybody else. Now, the number of line items here, obviously there's a lot of different line items. Whatever precise type of Subpart F income you have, or if you have factoring income or these 245A dividends, whatever it might be, make sure you're reporting it on the appropriate line item. Now, we've gone over what kind of Subpart F income we have before in previous videos, but again, just to reiterate, we are going to be having Subpart F foreign personal holding company income under 954C. And remember, personal holding company income is income that's portfolio type income, so interest, dividends, rents, royalties, capital gains from the sale of stocks, things like that. So what we need to do first is complete the the Worksheet A that's part of Schedule I. So the Worksheet A is included with the instructions. This one was prepared using the tax software we have, but Worksheet A, as it notes here, keep for your record. So again, when you file the return, you're only filing Schedule I with the completed numbers and the answers to the questions. You are not filing Worksheet A with it. You're just using Worksheet A to figure out not only what the total amount of Subpart F income is, what the Subpart F limitations might be because of an EMP limitation, and then ultimately how much of that Subpart F income is being allocated to the U.S. shareholder. Now the worksheet is 3 pages. Just start with page 1 and work your way down, right? So we go all the way from 1 to 69 different questions. Obviously, you can see here not all of these are going to be filled out for your individual circumstances, but it is a template worksheet, right, which is designed to try to capture all the scenarios that you might have in front of you. But in our example, we're certainly not going to need all this. So when we start at the top here, we're dealing with, again, foreign personal holding company income, right? So interest, dividends, royalties, rents, annuities, and excess of gains over losses, right? Basically, the sale of stocks, right? So we're selling stocks, bonds, capital gains, capital losses, and so those are the two that we have as far as income streams in this company. So the financial statements, again, we have capital gains from the stocks, and then we have the combined dividend income and interest income, and so those values are placed here, right, as the gross foreign personal holding company income, right? Remember, we're reporting the gross income amounts, right? We're not netting these of any kind of expenses. So we foot everything down here, line 2, right? Combine lines 1A through 1I, and we get $32,335 in gross foreign personal holding company income. Now, after you've computed what the gross foreign personal holding company income, and you've included anything else that might apply for gross Subpart F purposes, so if you have foreign-based company sales, services, right, and so on, after you've added everything up, you are then moving on to compute what your adjusted net income will be. So what do we mean here by adjusted net income? When you report gross foreign personal holding company income, this is the Subpart F income on a gross basis. Now, if you have expenses that are directly related to these, or they can be allocated under 954B5, right? So allocated in portion in accordance with those rules, then you can add expenses here that will reduce this gross Subpart F income amount. Now, we have some expenses here, right? So we have officer wages, accounting, license, legal fees, not too many. But the position that we're taking here is that really none of these are directly allocable to these income types. Now, a lot of tax practitioners will have different opinions on this. They might say, oh, well, some of these, we can make an argument that a lot of these are directly allocable. But generally speaking, when it comes to investment type income like this, particularly if it's not a trader type fund, so a trader tax status type fund, it's merely just a passive investment vehicle, you're going to find some challenges with arguing that expenses are directly related to these amounts. Now, what could definitely be directly related is, perhaps if you paid a third party like an investment management fee, or certainly if you had investment interest expense, right? So if you are borrowing money to float some of the investments, you could argue that interest expense is directly allocable. But in our case here, we're not going to allocate any expenses. So we're just going to leave the adjusted net foreign personal holding company income amount to be the same, okay? Then as we move on down to Worksheet A, page 2 here, again, continue to foot all these down. I mean, you'll notice that, again, foreign-based company income doesn't apply. We don't have any adjusted net insurance income, so no RIPI, so no related party insurance income. So that's why all of these are blank, right? Again, we have a very simple example here. Certainly there are companies that might have many of these different fields filled just because their profit and loss statement is much more complex, and they certainly have many more income streams, but not in our case here, right? So in our case, we can just get down to line 26 here. So the amount of 954C Subpart F foreign personal holding company income, again, is just going to be the 32,335 number. Now, the EMP limitation here is what's really important. Now, remember, EMP is computed, so we had that calculated on Schedule H. So let me jump down here as a refresher. So Schedule H is the current EMP for the company. Again, we use the book income or loss, and then we have net additions or subtractions that might apply if we have to make these for EMP computation purposes. But again, in our scenario here, we have a relatively straightforward one, so we don't have any of these adjustments. So our adjusted net EMP for the company is the 23,676 number. Now, the reason why this is important, because the Subpart F income inclusion is capped at whatever your current EMP is. In other words, even though we have $32,335 of Subpart F income, we cannot allocate or have an inclusion of more than whatever our EMP is. So this is why on line 37 we have the current EMP limitations, right? We have our EMP Tested loss is 0, and then so we enter the smaller of line 36 or 37C, and we get our 23,676 amount. And so when we further look to page 3 of the worksheet A, we can see now how the income is actually going to be allocated and apportioned to the U.S. shareholders. Right, so line 39, they ask basically what we read up above. If the amount is less than the amount on line 36, allocate subpart F income remaining, right? So after having being limited to lines 40, 41, 42, and 43 below in the manner prescribed by the regulations, right? Now, if the amount on line 37 is greater than or equal to the amount on 36, enter the amount from line 26 onto line 40, and then enter the amount from line 29 onto line 41, enter the amount from 32 onto line 42, and enter the amount from line 35 onto line 43. So quite a mouthful. Okay, so what's happening here? They're asking us to take the amount that's reported on line on line 37C, right? So they're asking us to take this amount on line 37C and then allocate it across these line items depending on what character of subpart F income it is. Right now, in our case, we just have one type of subpart F income, right? So we have foreign personal holding company income. That's why it's simply being all reported on line 40. If you had subpart F income that included a variety of these other types, then you would have to allocate each one in accordance with these rules across whatever type it was, right? So if you had a combination of foreign personal holding company income, a combination of, let's say, foreign-based company services income, whatever the amount up here would be, would have to be split up between those two lines because your subpart F income on a gross basis exceeded the EMP, okay? Now, the pro rata allocation, right? So shareholders pro rata allocation of line 40, right? So line 40 is the total amount of subpart F income that's being allocated to basically all the shareholders, right? And then we have to take an allocation based on whatever the measurement is, right? So in our case, we just have a very simple 75-25 split, right? John is the U.S. shareholder, owns 75% of the stock, and then the Bermuda company owns the remaining 25. So in our case, we simply take 75% times this amount, the 23,676, and that's how we arrive at 17,757. So that is 75% of the subpart F income allocation through the company, and again, that's limited based on its current EMP. Okay, now once all these numbers are completed and footed, we get down to the tax year limitation, right? So here they're asking divide the number of days in the tax year that the corporation was a CFC by the number of days in the tax year as a whole, and then multiply the result by line 56. So what they're saying here is that if you had a foreign corporation, which at any point during its tax year, so let's say the calendar year is our tax year here, which it is, if it was a foreign corporation and not a CFC at any point during the year, then you have to pull out the income allocated to those days, right? In this case, the entity was a CFC from the very beginning, right? So it was a CFC from day one as soon as shares were issued. So it's basically just a 100% allocation. And that's why we just have the 17,757 number here, which matches the complete allocation for the stockholder. And so complete the rest of the line items here is appropriate, right? So his pro rata allocation of the subpart F income is going to be, again, that 17,757. And then if a currency translation adjustment is required, then you would translate using the average exchange rate. In our case, again, remember, US dollars is our functional currency, so no need to do any translation adjustments there. Okay, so once all those line items are completed, you can see here on line 63, it asks us to enter the result here, and on form 5471 Schedule I, line 1E, right? And that's because, again, this this particular line item is reserved for the foreign personal holding company income. Obviously, if you had foreign-based company sales or services, you would use these line items down here. So we got our 17757 number, and that flows back up to the Schedule I here, and it's being reported on line 1E. Now, very, very important that you keep this worksheet for your records. As you can see here, it's highlighted keep for your records, and that's because they want you to know that, again, this is not filed with the IRS. A lot of people find this bizarre, right? Because this worksheet is very, very helpful. It provides all these details on how you calculated the income, expenses, allocating a portion across all the different types. But the IRS doesn't want to see it, right? All they really care about is Schedule I. So what they want you to do is complete the worksheet for yourself, make sure you got supporting evidence for all the numbers, but ultimately they just want you to stick that number there, and then that's all you need to do for the form. Now, questions 7 and B here. So 7A is asking, is any income of the foreign corporation blocked? No. What do they mean by that? Well, some countries have limitations on when the corporation can actually distribute dividends to the shareholders, right? So a lot of countries, so like China, for example, does this quite often, where non-local investors might have income blocked in the sense that they can't actually pull it out of the company. And if that's the case, right, so if the foreign country is actually blocking the income, then what you have to do is you can treat the Subpart F income as blocked, which means it doesn't actually get passed through to you. The logic being, this is really beyond your control, right? So why should you have income passing through to you if the foreign corporation income is actually blocked? Okay. Now, question 8, if you answer yes to any of these questions, attach an explanation. In this case, no, right? So we're not answering yes to any of these. So we didn't have any extraordinary dispositions, right? And again, these are all questions that follow, this question 8A, right? So no ED type accounts, and so in our case, again, no for everything there. And of course, I do, like the other schedules, for some of these more complicated questions and examples, I will have separate tutorials on these. But again, for purposes of this fact pattern example, we're trying to keep it relatively simple and straightforward. So that's why we're having no answers for these, because they don't apply, and we're not trying to make this example more complex than it needs to be. Okay, so that covers it for Schedule I. Now we will complete this video and move on to the next one.